Intro. Today we're digging into a hot question on every crypto watcher's mind. Now that the first Solana ETF is live in the United States, how high can SOL go? Could it really hit $400? I'll walk through what's driving the recent excitement around Solana, why the ETF matters, and the key factors investors should watch as the market reacts. The rise of Solana. Solana has carved out a distinct spot in the crypto landscape with a focus on high throughput and low fees. Those technical advantages have attracted developers building decentralized apps and projects that demand fast, inexpensive transactions. That growing ecosystem, from DeFi to NFTs and beyond, has helped push SOL into the spotlight and fuel renewed interest from traders and investors. Why the Solana ETF matters. The debut of AU's Solana ETF is a milestone because it creates a simpler, regulated route for institutional and retail investors to gain exposure to SOL without buying tokens directly. ETFs can bring fresh capital and smoother access, and that potential inflow is a key reason some market observers have turned bullish on SOL following the launch. Could SOL reach $400? Some analysts have penciled in $400 as a target, citing the ETF's launch and broader market momentum. While $400 sounds ambitious, rapid gains are not unheard of in crypto, especially when new investment channels and rising adoption coincide. That said, price targets are speculative forecasts, not guarantees. Outcomes will depend on market appetite, macro conditions, and how the Solana ecosystem develops. Factors that could push price higher. Several elements are often cited as bullish drivers for SOL: network scalability and low transaction costs that appeal to developers. A growing roster of projects on Solana that increase on-chain activity and demand for the token, and potential inflows from ETF investors seeking exposure. If these dynamics accelerate together, they could create meaningful upward pressure on price. Risks and caveats. It's important to balance optimism with realism. Crypto is volatile, and regulatory shifts, network outages, broader market corrections, or waning developer interest can all reverse gains quickly. ETF inflows can also be uneven and influenced by investor sentiment and macro liquidity conditions. Anyone considering exposure to SOL should weigh these risks and avoid treating price targets as certainties. Practical takeaways. Keep an eye on on-chain metrics, transaction volume, active addresses, dApp activity, ETF flows and adoption, and macro factors like interest rates and equity market trends. Those indicators will offer clearer signals about whether momentum toward higher price levels is sustainable. Closing. The Solana ETF launch is a notable development that could open new doors for SOL and accelerate adoption. And while $400 is within the realm of possibility for some analysts, it's one of many scenarios. Stay informed, approach targets with healthy skepticism, and do your research before making investment decisions. Thanks for listening. We'll keep tracking Solana as this story unfolds.